Hey guys, Michael Eber here with True Trading Group. This is a very important video that you're about to watch because I'm going to walk you through a bearish signal that I guarantee will save you guys a ton of money by exiting a trade before a stock falls apart. Very oftentimes throughout the day, or you ever guys realize that you find yourself buying a stock that's strong in the morning, and all of a sudden the stock just falls apart and rolls over just after the stock made a new high, and you just can't seem to figure out why, and you're like, oh man, I just have the worst luck. It's not luck. There's a signal that the stock is giving you that you just may not be seeing, and I want to walk you through that signal now because it will save you guys a ton of money, and I want you to begin to recognize this bearish signal because it's a very common bearish signal. And the sooner that you can recognize this signal, the faster you can exit a trade, and you could either lock in profits or exit and save yourself from losing a lot of money. I'm going to get right to the charts right now, and I'll walk you through it. Now, let's look at CALI to start. As you guys know, I'm a big stickler for when a stock breaks through the high of the day on an increase in volume, you look for that previous high to become support. Here's your previous high. Here's the stock breaking through, making a new high on an increase in volume. So what do we do when that happens? We then look for that previous high to now act as support for the stock. Okay, then here it is. CALI started $3 was resistance, was the previous high, broke through $3 on increase in volume, then $3 started holding support. Then the stock starts to push. Okay, a lot of people started getting long this stock in here as the stock started to hold above $3. And then what did the stock do? It completely fell apart. How can that be? How can a stock break out? It actually made a new high. This high right here is $3.23. The stock broke that high and hit $3.33. So it broke it by 10 cents and then fell apart. This is the bearish signal that I want you to start noticing. When a stock breaks the high of the day and very quickly pulls all the way back in to retest the support level that you just bought in front of, it is a very bearish signal. And oftentimes that support level will break and the stock will roll over. I'll show it to you again. Okay? Here's your support level that you're buying in front of. Here's the high of the day. The stock breaks the high of the day right here, and then very quickly pulls back in to retest the support level that you just bought in front of. That is a bearish signal. Then you see this, Then you see the stock breaks below the support level, rolls over, and sells off the whole rest of the afternoon. This is the signal I want you to start recognizing. Because very, very often, after you see a stock give you that signal, it falls apart. I'll give you another example of this that happened today in LBIX. Exact same situation. Let me pan in so you can see things a little more clear. Now, here's the previous high of the day, $2.20. The high gets broken to the upside. Here it breaks the high of the day on an increase in volume. So when that happens, what do? We then look for that high to become support. And it did. You can see very clearly, you see LBIX now holding above that previous morning high. It's now an area of support. Okay, so this high has been broken, so let's delete that. And now let's circle our new high of the day. New high of the day, $2.49, right here. Here's your support. You guys start buying in front of this previous high, as you should. It's a great pattern. Stock makes a new high. This is actually $2.52. So the stock broke the high of the day, but what did it do? Very quickly pulled back in to retest that support area that you just bought in front of. Bearish signal. What did the stock do the rest of the day? Sold off. See that? People in chat were actually asking me around 12 o'clock, Mike, what do you think about LBIX right now? It's back to that support level. And that is what prompted me to speak about this bearish signal in chat. And I gave a whole lesson about it during the day. And I gave a whole lesson about it after market as well. And now I'm making this video about it because it is a crucial part of trading that will save you guys a ton of money throughout your trading career. It's recognizing this bearish signal. I'll say it again. When a stock breaks the high of the day and then very quickly pulls all the way back in to retest that support level that you just bought in front of, it's a very bearish signal, and the stock usually rolls over the rest of the afternoon. It happened in LBIX, and it happened in CALI. Okay? This is not a coincidence, guys. Okay? This is a signal that stocks will give you. You need to pay attention to them. You need to listen to the stock. When you get a bearish signal like that in a stock, you need to readjust your game plan and you need to reanalyze the trade. You can't be biased when you're trading. It'd be very easy for you to sit here and say, oh, well, it's holding support. Look, it's still holding. Look, it's still holding. Okay? And say, oh, the support level is still holding. It's because you're not recognizing the bearish signal the stock just showed you. This is the stock saying to you, hey, Mike, I know I was strong as hell in the morning. I'm not strong anymore. That's the signal. You need to listen to a stock when it gives you these signals because it can cause you to exit this trade at $2.25 right here versus exiting the trade at $1.95 all the way down here. Okay, or even here at $2.09 after the stock broke the support level. Why wait for the support to break if the stock gave you the signal? This is the stock saying, hey, that support level you bought in front of just a couple minutes ago, it's not going to hold this time. Listen to the stock. Don't be biased. Analyze the trade from a neutral standpoint. It'll help you see these signals, okay? Because it's so easy to be biased when you're trading because you're long. You want the stock to go higher. So if you want the stock to go higher, you're going to see every reason to hold on to the stock thinking it's going to continue going higher. Okay? It's harder to see reasons why you should get out of the stock and to see reasons why you might be wrong. But that is what's most important when it comes to trading. It's recognizing when you're wrong. A lot more so important than it is recognizing when you're right. Okay? And identifying this bearish signal will save you guys a ton of money. Learn it. Start identifying it when you see it throughout the day. For those of you that like to short stocks, it is a fantastic entry for shorts. When you see a stock break that high of the day and then pull back into that support level, you can start shorting the stock using that previous high as your stop loss. Okay? It's a great entry for short positions, and it's a great way to exit long positions. It's a signal. It's a bearish signal nonetheless. Start paying attention to it. I'll see you guys tomorrow.